Okay, so welcome back to this Forex Beginner to Pro course, and we are progressing. Exactly, we are progressing, we are moving. Okay, today's video is the first video on the Forex Beginner to Pro course. Okay, and on today's video, we're going to look into lot size, leverage, pips, point, and spread. Although we've already spoken about spread, but as I already said, everything taught in each video are always, coming up and repeating itself. You understand? Okay, so let's dive into today's video. Okay, so on today's video, these are today's roadmap. These are the things we're going to look to. What is the lot size? What is leverage? What is pip? What is a point? What is spread? And why all these concepts matter? Why do all these things matter? We're going to look into it. Okay, so please be prepared. Get your book and pen ready. Sit back and let's learn together. Okay, so a lot size. A lot size is the unit used to measure the size of a trade in Forex. Okay, this lot size, in the previous video we talked about Forex codes, the bid price, the ask price, the spread, exactly, the base currency and the quote currency. Okay, so on today's video we're going to talk about this. What I'm going to look into. You understand? So if you haven't watched that previous video, you need to watch it because they are aligned. You understand? You have to take it step by step. Okay, so the lot size is the unit used to measure the size of each trade in Forex. Okay, so this lot size, when we get into the advanced part of this Forex Beginner to Pro course, when we start taking trades, when we start making videos on how to take trades, how to demo trade, your risk management, so you understand what I'm trying to say very well, but I'm going to explain it in this video as well. Okay, in forex trading we have different type of lot size. We have the standard lot, we have the micro lot, we have the mini lot, we have the nano lot. Although this nano lot, we don't used to use it that way. We don't used to use it because no broker used to offer it. Only few brokers used to offer it. You understand? Okay, so the lot size. Okay, so this lot size is just like the volume of the amount of the volume you're about to trade in the forex market. This will determine the kind of lot size you use. Understand? Let's say you're trading $100,000 account. This unit, let's just say you're trading $100,000 account. The proper lot size you're supposed to use is just one standard lot. You understand? And with this one standard lot, you're going to make just $10 per pips movement. You understand? By just one pips movement. We are going to look into what is a pip in this video. You understand? So, and if you're, how let's say it, yes, if you just want pips movement, it means you're going to make $10 from it. And if the trade is actually going your way with one pip movement, you make $10. And if it's going in the opposite direction, you're going to be losing $10 just with a pip movement. You understand? Okay, so this mini lot too, let's say you are trading with a $10,000 account. You understand? The proper lot size for you to use, or the standard lot size, the proper lot size for you to use is 0.1 lot size. You understand? And with each pip movement, you understand, with each pip movement, you are going to be either gaining $1 or losing $1. If you gain $1, it means if the trade is going in your direction, or you're either going to be losing $1 if it's going in the opposite direction. So that's about lot size. Lot size is just is the amount of volume that you need to trade. You understand? That's just lot size. Okay, so we have micro lots. When you are trading with a $1,000 account, you're supposed to use 0.01. You understand? And with each pip movement, you're going to be making $0.1 or minus $0.1. It depends if the trade is going your way or not. You understand? So these nano lots, yes, these nano lots 0.001. Although this micro lot, no trader, no broker is really offering it that much. Although maybe few brokers used to offer it. You understand? But the broker I used to not offer this nano lot. So let's just look into this basic one: the standard lot, mini lot, and the micro lot. Do you understand? Okay, and normally, let's say you have a $100 account, $100 in your account, in your trading account. Normally, because this broker nowadays does not offer nano lots, you start with a what micro lots. You understand? You're going to use 0.01 for your $100 account using your proper risk management, like a proper lot size. You're supposed to use 0.01, and with each pip movement, you are either going to be making $0.1 or losing $0.1. I hope I'm able to explain this lot size very well for you. Understand? And when you begin to place trade, you're going to see the live example of this lot size. Okay, so the lot size, the bigger the lot size, the bigger your potential profit or risk. Exactly, the bigger your lot size, the bigger profit or risk. You understand? So that's it. Okay, so let's go to the next page. What is a leverage? Sorry for the mistake. I hope you are taking notes. Okay, so what is a leverage? Leverage allows you to control a larger position with a bigger amount of capital, with a smaller amount of capital rather, with a what small amount of capital. You understand? The word small. Okay, this leverage, these are the things that the broker offers to us. Don't worry, in our subsequent video, sorry. Don't worry, in our subsequent video, we're going to talk about leverage. This leverage are the things that the broker offer us for us to be able to open bigger position. You understand? Why trading? You understand? So this leverage, I already said already, these are the things that the broker offer us for us to be able to open bigger position, you understand, or place more trades, you understand, with a small capital, you understand. So this is the advantage. Okay, so leverage, your broker can offer you a leverage of 1:1, 2:1, 1:50, 1:100, 1:200, 1:500. Even some broker offers leverage up to 1:500, 1:1000, 1:2000, and like 1:2000. Yes. Okay, so this leverage, what does the leverage does to your trading capital, or your trading, yes, to your trading capital, or to your trading account? This leverage gives you, it makes you to be able to open bigger position, or to be able to open many trades. Okay, let's give an example. Let's say your amount traded, the amount you have in your trading account, you understand, is $100, and you are offered leverage 1:1. 1:1 is just basically the amount you are trading, is the amount in your trading account. That's going to be your normal margin. Your margin is what is your the money, your margin is just your amount in your trading account and multiply by your leverage. That's what your margin is. You grab. Okay, so that's it. So let's say if you have $100 your account, that the same $100, and you're giving leverage 1:2, you understand, that is going to be what 500. Rather, this is mistake. Rather, it's supposed to be 500, you understand, no, 200 rather, because 100 times 2, you understand. But the way it's written, it's supposed to be written like 1:2. This is just, upside down. 1:100, 1:50, 1:200. It's not 100:1. 1:500. Okay, so that's the normal way leverage are being given. 1:1, 1:2, 1:50, 1:100, not 100:1, 1:200, 1:500. Understand? So you're going to, for you to know the amount like the broker are borrowing you, you're just going to multiply your capital by your leverage. Like now, 100 times 2 is going to give you 200. You understand? Which means you look as if you are trading with a $200 account. You understand? This one, 200 times 50, it will look as if you are trading with a what $50,000 account. Yes, 50. Is it $50,000 or 500? Is this, yeah, I think it's $5,000. I don't know. Please just do the calculation for me. Okay, so that is about leverage. Leverage is the what is the amount your broker is borrowing you to add to your trading capital, just for you to be able to open a bigger lot size, for you to be able to open a bigger position, rather a bigger position. So that's all about leverage. So let's go to pips. Now let's go to pips. We have been saying pips. Even in the previous video we mentioned pips. Okay, so what is a pip? Pip is what is the percentage in point. Pip is just what is the movement in the market. You understand? It's just the little movement in the market or the massive movement in the market. So all those movements in the market, I say, I gain We took a trade today and we gained 50 pips. 50 pips was what the gain we took today. Okay, we trade today and we lost about 50, 40 pips. You understand? You got what I'm saying? So pip is just the movement in the market, either small movement or massive movement. That's what the pips is. And the meaning of pips is what? Percentage in points. You can see the meaning of pips is what? Percentage in points. How that like this? Sorry for this. Okay, so the meaning of pips is what? Percentage in points. So it is the smallest price movement in exchange rate or in markets. You understand? So this is rates. This is what we mean by rates. You understand? So that's a pip movement. So the difference between the ask price and the bid price give you pips. I told you already. Understand? So this is 1.10.40 and the second price 1.1041. So the difference between the ask price and bid price is what? The pips. It's known as the spread, and this spread are always in pips. You grab. Look at this one too. This is 1,000 pips. You see, it depends on, let's say you are trading now and you place a trade in this value, in this amount of value, and what this 5 changed to 6. You know that you already know that you have already what your trade have moved in profit of just 1 pip. You understand? And if this 45 changed to like 50, you know that your trade have moved in direction about 5 pips. You understand? 50 pips rather. Sorry, like I mean this one, if this 4, you understand, change to about like 5 or something, you know your trade have moved in direction with your pips rather. Okay, so that's what I'm trying to say. Okay, so if I'm making any mistake in this video, just pardon me. It's normal for us to make mistakes sometimes. Okay, so I hope I'm able to explain what a pips is. A pips is what? A percentage in point, and a pips is known as the small movement in the market or a massive movement in the market. Okay, so that's it. So let's go to point. What is point? A point is also like a 1/10 of a pip. You understand? A point is a fractional pip. You understand? Fractional pip. So 1 pip is equals to 10 points. Understand? When we start placing trades, you understand what I'm trying to say very, very well. Understand? Okay, so a pip is just what? 1/10. A point rather is the 1/10 of a pip. You understand? So a point is a fractional pip. So 1 pip is equals to 10 points. Okay, this is just an example. I already explained this already. Euro USD, ask price, bid price. So the difference between this is what? Is 1 pip. So look at now, 1 pip is equivalent to 10 points. Then 10 pips is equivalent to 100 points. Then 100 pips is equivalent to 1,000 points. That is very, very simple. Okay. So now we've already talked about what? The points, the pips. We talk about leverage, lot size. I hope I'm able to explain it. Please, I hope you are taking notes. I hope you are taking notes. Okay. So the next one is what? The spread. This spread, we've already spoken about this spread in the previous video, but is reflecting again in this video. This is just to tell you that everything that we are learning in every video, still you need to take note of it, because when we start placing trade, when we go into the advanced part of this Forex beginners pro course, you will need everything there. Okay, so the spread is the difference between the bid price and the ask price. I already said it already. So this is the bid price and the ask price. So difference between the bid price and the ask price is what is the spread, and this spread are always in pips. You understand? So the difference now between this price, the ask price and the bid price, this difference is the spread, and this spread, they are always in pips. I already said it away, and this I already said it already. These spread awards are the way our broker make money. These are the commission we pay to our broker. Okay, so let's go to the next part. So why does all this I was saying, why does it matter? It's really, really matter, because when we start placing trade, you will now understand very well what you will now see how you need to use a proper lot size. If you're using a standard lot size, if you're using a mini lot, a micro lot, and you understand, when you start placing trade, you see the usefulness of a leverage. You understand? You know the usefulness of a leverage, lot size, pip. You understand? When we start placing trade. But you understand, since I told you that this video is a beginner guide, you understand, we haven't gotten into the advanced part, but we are going to treat everything in this beginner to pro course. So why this concept matter? Lot size determine how much you risk. Exactly. It depends if you're using if you're using very the more your lot size, the bigger your lot size, the bigger your risks, you understand, or the bigger your profits, you understand. And leverage can amplify gain or losses. Exactly. Leverage are what are the money that our broker borrows us to our trading amount, to our trading capital, just for us to be able to open bigger trades or open bigger position, you understand. So what is peep and point? Peep and point shows the market movement. Exactly. You grab, I did explain this. This is just like a this is just showing the reason why all these are very, very important. Understand? So peep and point shows the market movements. In every market movement, it's going to show you that okay, this the market just moved 10 pips in our direction. You understand? So spread is your entry cost into a trade. Exactly. The spread is what is the commission you're giving to the broker, is the cost of your entry that are giving to your broker. You understand? So okay, so understanding this basic thing will make you more smarter, more confident as trader. Exactly. You need to understand all these little points as a trader or as a beginner trader. So that's it. So on this video, I hope you're able to understand this video. Okay, my system is almost low, so let's be fast. Okay, I hope you're able to gain something from this video and you're able to jot everything down. Okay, so the last but not the least, this is just a summary of everything in this video. Lot size is also known as your volume. You know, the volume you are trading with. If you're using a standard lot, you know that you are risking more and you're supposed to use a bigger capital. You understand? So leverage is just the power to control bigger trades. You understand? For it's the power is this leverage is what is the as I already said it already, is the money that our broker borrow us just for us to open, just for us to be able to open bigger position. So the pips is the smallest price movement, you understand. So the point is the fractional pips, then spread is the broker fee. I hope you're able to break down everything in this video. So on this video we talked about what lot size, pip, spread, point, leverage. Okay, so on the next video we're going to talk about how to what how to get your forex broker, how to open your broker, how to open your forex brokerage account. So I hope you're able to learn something from this video. So if you've watched this video to this extent, do wait to like this video, subscribe to this channel, comment on this video, and we continue on this forex beginner to pro course. You understand? So do wait to like this video, comment on this video, and I will see you on the next one. Bye for now.